on.
Well, if you blinked at all this week, I guess you missed a buy the dip opportunity. Up again this morning. We do have one potential roadblock, the PCE inflation data at 8:30. We'll discuss that and much more with Mish Schneider at 8:15. Nike, little bit of misstep. We'll see if they buy the dip in that. It's Friday. It's the end of the quarter. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Morning, traders and investors. We're up cool 17 handles, 52.75. Caught a bid right off that 6 p.m. open. The buck back up over 103, up 8 cents at 103.08. Bonds down again, down 9.30 seconds, 125 at 28.30 seconds. Crude dancing around 70, up a dime, 69.96. Gold moving towards 1900, down 580 at 1911.90. Silver stuck in the middle 22 handle, down 19 cents at 22.40. And Bitcoin futures over 31K, up $295. Let's bring in Triple D. And Triple D, do you know why it's probably going to be a pretty slow day in the market?
I'd say it's not going to be I think it's going to be a slow day, but I think it's not going to be a slow close. It's the end of the quarter. It should be a good day for trading. Don't tell me it's going to be a slow day. Traders don't want to hear it's going to be a slow day. We want to hear it's a good day.
Well, don't you know about the 4th of July theory on Tuesday? Do you know about that?
Well, I don't think anybody. I think volume is going to be very light on Tuesday.
Okay. Well, here's the thinking. Okay, if the markets are closed on Tuesday,
yes,
and there's a half day on Monday,
yes,
right? Do you really need to work Friday? Like you leave Thursday night for your vacation, and then you can come back Tuesday night.
These traders are getting too lazy here now. We need to be in there and trade because you know what? I need movement. I need action. You don't need 4 or 5 day weekends. I say you go Friday night or Saturday morning on your vacation. You go till Tuesday. So take your half day off on Monday, and then you're back in the saddle on Wednesday. So you got to work the end of the quarter. This is the end of the quarter. You got to work the end of the quarter.
It's been a good quarter.
And I'll be trying to move, and I'll be trying to be a mover and a shaker.
It's a good end of the quarter, right? I mean, can't complain, and it looks like we're going to end here on a strong note. You want to talk about any window dressing, or Mitch, do you have any stats for the quarter? I mean, it's been a good one.
It has. If you would have told me at the beginning of the year, hey, Mitch, half the year, the S&P is going to be at 14.5% higher, and the NASDAQ is going to surge nearly 30%. I would have been like, no, honestly, I would have been like, what are you smoking? Because honestly, I think everyone would have been like, yeah, what are you on, man? But the truth is, this is why it's so important to understand where the beaten down sectors are, I think, of the year. Because sometimes those can become the best sectors the next year. Technology was just that, right? Everyone last year was like, no, I don't want chip stocks. I don't want NVIDIA. I don't want Meta. Well, now looking back, everyone's like, man, I should have grabbed it. I should have grabbed it.
I mean, hindsight capital is always 2020. Yeah, always. I think there was some people who called this rally. I think they were few and far between. I think some people who give themselves credit for calling this rally, a la Tom Lee, were calling the rally last year, the year before. I mean, you can just stay in the bull camp and say, oh, yeah, I called this rally. Wow, you didn't do that well in 2021. You didn't do that well in 2020 at the end of it when we started to sell off. So, I mean, or 2022. So, I mean, the eternal bulls that are tooting their own horns here now, I don't give them credit, but there's traders out there who are very good that, Ryan Dietrich, obviously, has used some stats. He has been on the bull camp. I give him a lot of credit here because at moments in time, Ryan Dietrich will say, he's not always in the eternal bull camp. He's using stats. He's using different things. So just be careful with who you're following out there that, oh yeah, I got this right. Well, if you're always bullish and you go through a bull market, you eventually get it right. But how'd you do in 2021? So, I mean, it's a tough call. It's always tough to call the markets. I mean, take this moment in time, Joel. Where are we 6 months from now? Nobody knows anything. Nobody knows where we're going. Nobody's got a crystal ball. It's projections. It's guesses. There's always somebody going to guess right. I mean, and it's easy to guess bullish because the markets trend up over time. It's why you own stocks in your long-term portfolio. It's why I never go short a stock in my long-term portfolio. Never been short a stock in my long-term portfolio. No. The reason is because the long-term portfolio is supposed to be grows over time. So you're always fighting the tape. That doesn't mean there isn't times to be bearish. It doesn't mean there isn't times to make money on the short side. There's times to make money on the short side all the time. But I think there's a lot of people who, are saying, yeah, I told you so. But where were you in 2022 and 2021? Were you telling me it was bullish back when we were up, highs? Because perspective here, it's been a tough couple of years. It's been a great 9 months, but it's been a tough couple of years.
It has. And I think one of the things that, sometimes happens is that there's always something that comes into the market. Like I was thinking about it back. We first had cryptocurrency, then we went blockchain, we went NFTs, we went metaverse, and then came this AI thing. I think that's really what's gotten the change, really, because if I look at the headwinds and the tailwinds out there, I mean, there's still a war going on, right? There's still concern that China can invade Taiwan at any moment. There's still high inflation. The Fed hasn't pivoted. To me, it's just AI bubble that has brought these tech stocks.
It's all multiple expansion too.
Yeah.
I mean, it's all multiple expansion. Like if we look at the earnings, NVIDIA exception because that earnings report was just phenomenal. But for the most part, when you look at all of these earnings, this isn't like, oh, Microsoft is making so much more money than they were at this time last year, or Apple's making so much more money than they were at this time last year. It's just multiple expansion. This has just been FOMO. We've taken these multiples on Microsoft from 25 times to 33 times. We've taken Apple, which at one time, believe it or not, when we started this show, Joel, everybody was like, when is Apple going to get some love? Because it was always trading 12 or 13 times earnings.
That was Gene's premise.
All the time. Gene was right on this. Nobody more right than Gene Munster on Apple because he was in the bull camp the whole time. It was trading 12, 13 times earnings. And he's like, when is this actually going to get, if this got a market multiple even of like 18 or 19 times, then he's like, it's going up 30, 40, 50% just from multiple expansion. It not only got a market multiple, it's way over a market multiple now, and now you get the upgrade. So this is, or not upgrade, buy rating from Citigroup, taking their price target, or I guess they didn't have a price target. They're putting a price target on. I don't know if the analyst left because obviously Citi would have covered Apple. So maybe it's a new analyst. But, and here, and, just talking about Apple, I mean, 190, 131, I have a trading position on an Apple, but, just talking about Apple in general, you get the upgrade now or the buy.
Initiation of a buy. It had to be
initiation of a buy.
Yeah, I mean, because why would you just wake up on the Friday with an all-time high like, oh, this is it, baby. I got to come out. No, I don't know. I think it's a new initiation. It's traded up double what the SPY's trading. So
for sure, because it's going to get talk. They were talking about it last night, even on CNBC. They're talking to talk it. I mean, so it's up. I'm long it, full disclosure, just for a trade, but I'm going to be selling this today. So I'm going to actually probably talk against my trade here right now because I think it's crazy to be coming in with buy ratings on this thing now. I mean, where were you crazy 6 months ago? This thing is straight up. I mean, it's 32. What is the multiple?
It's probably over 30 now.
Over 30 now. Yeah. This isn't a company that's growing 40% a year or 20% a year. Is this even growing at all? They're saying EKS is saying 20% a year. I don't think Apple's growing 20% a year, is it? I don't think it's growing that high. Maybe I'm wrong.
No, I don't.
But I don't even think it's been growing at all lately. It's a cash cow iPhone company. They're going to have products. Apple's still the best run, one of the best run companies there. But you're not getting it cheap anymore. That's the biggest problem is when you're investing, you want to invest in good companies at reasonable valuations. Apple's approaching not being a reasonable valuation anymore. It was a reasonable valuation. I owned it in my long-term portfolio for the better part of a decade. I sold it, and you knew I sold it. I sold it at 175, and it went down to 125. I obviously should have rebought it. But, I've sold out. But, I mean, here's the forward P. The current P is 32. The forward P is 29. So, I mean, wow. I guess we just, I guess we're just in this FOMO environment where you pay 29 times earnings. I don't get it, but that's what we're in.
The truth is I've thought about that for a while, for a long time about Apple. And what have I done? I've missed it because of that. And I think that at the end of the day, we have to remember it's just the best of breed. And we'll continue going higher as long as the market goes higher for right now.
Yeah, big component. Yeah,
things change.
And that's the way I think.
So
I understand, Dennis. I understand that things can change, right? We could see the top, kind of the leadership change. But for right now, how long has Apple been there? And I don't see it going away anytime soon.
Look at your longer term chart here. There are not a lot of moves here. Take, the 2020, that was a huge move, but everything went up then. But there's not a lot of stocks of Apple's market cap that go up from $124 to $190. So you're talking about a 65 point move on 124. You're talking about what, a 55% move this year? Apple's up 55%. The biggest company, one of the biggest companies in the world, is up 55% this year. You think it's going up 100? It might, but the bet is that eventually you're going to have some mean reversion here. The bet is eventually you may actually have a pullback, a buyable pullback. Would I buy a pullback on Apple? Yeah, probably. But things just usually don't go up in a straight line. We have basically went up in a straight line, AI, FOMO driven to Mitch's point, for the better part of 6 months. That is what we've done in the first half. Apple's basically up 50% in the first half. This is a huge move, folks. This is an absolute huge move. Can it keep going? Things can keep going. As trades, maybe you just ride the trend. But if you're coming here and saying, I got to buy some of this Apple in my long-term portfolio, this is the time to invest. The time to invest in good companies is on pullbacks, not on 50% runs in 6 months. This thing could go down to 170 or 160 and be like, what a terrible company. No. Not what a terrible company. What a terrible purchase by you, I would say, if this goes back to 160 or 170. Because you have FOMO. So if anybody gets burned on Apple buying at 191, it is their fault. And maybe it goes to 240 straight like Citigroup is saying.
Yeah, it's not going
but
straight
I
to
think
240.
It's due for a pullback.
We'll see what happens.
And again, you can keep it around. I know we got to keep moving the show around, but I'm just trying to make a point to you long-term investors because we talk trading so much. Come in and buy good companies. Apple is definitely the good company at reasonable valuations, 32 times current earnings for a stock that's growth rate is, we can grab that too. Somebody said 20%. I don't believe it. Revenue growth is 7% right now. That's where revenue growth is on this thing. Maybe they're cutting costs and maybe they're trying to make the bottom line look a little bit better as they cut costs. But revenue growth is not warrant coming in here and paying 32 times earnings. Not in my case. But maybe AI is going to come and maybe it's going to change everything. And maybe it's going to start growing at 25, 30% a year. If Apple starts growing at 35, 40% a year, it's definitely worth this. There used to be the PEG ratio. Remember, you look at the growth rate and you look at the PE. People would actually, and you say, oh, you're getting one. So, I mean, if it has a 30% growth rate, you pay 30 times earnings.
Hold on, like Dennis. I think I have that in a book back there somewhere, but I don't think
I know,
it
but nobody follows books anymore. So, again, I'm not talking to any traders here. Stocks go Kenny Glick. Stocks go from 180 to 190, usually go to 200. The party probably still continues, but I'm talking to you long-term investors here. Buy them at reasonable valuations, not after they've had 50% run-ups. That's my point.
All right, let's keep it running to Nike. Nike Q4 EPS missing estimates here, but sales beat expectations. Q1 revenue growth expected to be flat, up to low single digits. So it doesn't look good here for Nike, but a little bit of buy the dip going on this morning. What do you guys think?
Nice run into the report, right? And then you can see it just stalled ahead of the report. Pretty high expectations. They did have a dip. They gave back all those gains. 107.30 was a low. You've got to bounce off that. I don't know what they said during the conference call. To me, I'm just going to look, man, you got to. I'm going to call 112 resistance now. You had a trio of lows there. Yesterday's low, 112.61. So I think you got a battle there. And I don't know if Dennis, is this a stock? I mean, that doesn't really fit the bill of the Apple. So I don't know. I don't know. I'd be so quick to buy this
That's
one on the
just
dip.
beaten up. I mean,
Yep.
Nike is not cheap either. So if we want to go into Nike, and I'll just grab it here, almost identical to Apple, actually. Funny, 32 times earnings, 28 forward multiple. Nike is not a cheap stock here, folks. Not growing much either. Revenue growth to be flat to up single digits. So, I mean, that doesn't sound great. They're saying 2024 is supposed to be better. Well, they always look when they look out a year, but nobody knows a year from now. But this is what they all do. So this is what happens. Growth don't look that great, but we're going to be good in 2024. That's, what they're basically saying. So we don't look that good next quarter. We don't look that good for the year, but we'll be good in 2024. We'll be good in 2026. That's what they do. So when they're not reporting a great quarter, and this was not a great quarter, to try to we don't want the stock to sell off too much, we'll tell them we'll be good in 2024. I'm sure we'll be good in 2024. Oh yeah, we'll be good by then. Yeah, you're projecting interest rate cuts by the Fed and everybody starts getting back to a party like that. This quarter sucked. Honestly, the Nike quarter absolutely sucked. But what I tweeted last night is you're in this buy the dip environment where they're like, I got to buy something. Nike's significantly off from the highs. Highs were back at 177 where people were playing ridiculous valuations for Nike. So they got to justify and they want to come in and buy something like this. So does a dip get bought? It's a big name. It's a widely owned stock. Does a dip get bought on Nike? It fits some checks, some marks for some portfolio managers. So probably, but I'll tell you right now, this was not a great quarter. Next.
All right, that's going to do it for Nike.
It's even hard to interrupt you. I'm going to interrupt.
Making points. That's the point to the show.
Baby.
Let's get to Mish.
All right, let's get to our guests.
Mish, you're doing some navigating here to get to us. Michele Schneider, Chief Strategist, Marketgauge, FinTech Publisher, commodity trader, former floor person. We love to have floor people on here. So big windstorm, knocked out the internet at her house. She scrambled and made it to her office, Mish. We really appreciate you coming on today.
Thanks, Joel. Good to see you all.
All right. So you got, we're going to deviate a little bit from the modern family a little bit. And with the PCE number coming up momentarily here, let's talk about, some macro and the yields you could get in the market, the potential for stagflation. Mish, how are you sitting on these issues?
Well, not much has changed really in terms of my overall feeling about what's going to happen over the next couple of years. And now I think we have more evidence. Obviously this rally that we've seen in the tech rally has been spectacular. And so there's always, and I was listening to Dennis and Mitch talk about this, there's always the opinion and the macro. And then of course, then there's the trader mentality. And so as the trader mentality, it was a spectacular rally and we were able to take part in a lot of it. And that's simply because of the math. There was absolutely no emotions or thinking about it. It was following the models. And I believe that that's who did better this year is the people who just said, wow, this is going up. I don't care why, I'm just going to buy it. And so I just wanted to follow up on what you guys said before, because I was listening. And it's so true. And that's why Apple at 191, people are going, damn, why didn't I buy it when it got over 175? Well, 175 was a huge breakout. So a lot of people still at this point, and particularly institutional investors, and I'll get back to my point about stagflation in a moment. I just wanted to follow up on that.
I appreciate it.
Yeah, are either they've missed this rally, and so now FOMO, as you were mentioning before, and on the same token, it's a rally that's not stopping, at least not yet. So now let's go back to stagflation. Does the tech rally really represent growth? We did have a decent GDP 2%. I mean, it's nothing expansion, but it's at least not contraction. And I think that's really what brought us the first 6 months to this point was A, there was a feeling that inflation might have peaked, and we'll get back to that. B, tech area was actually relatively undervalued coming into this year. C, there was an overall sentiment that the Fed was going to at least, maybe if not even pause, at least slow the rate of how fast they were going to hike. And really the champions of all of this are the consumer, because the consumer has been going out spending money regardless of all the doom and gloom out there. So that has really brought us to this point. So that makes me question, is that optimism going for the next 6 months going to continue? And we can already see evidence that maybe not. This yield curve is inverted to a point that it hasn't been since 1983. That generally means at some point there could be recession. People were expecting it right away. We have earnings season coming up. I'm thinking maybe we don't even see recession, at least in the actual terms of recession, for a while, because we still have to go through this stagflation, which means right now, with the Fed saying they're going to raise and inflation not really going away, it tells me that if they're more aggressive, we'll have to go to a stagnating part, and eventually they will have to do something more aggressive to get that job market being a little bit weaker so that they can then possibly put us into the recession. And that's where we're at right now. So if that's the case, this big tech rally will be impacted, but that doesn't mean that there won't be a good rotation into other opportunities.
This is a good segue here. And what I've been noticing over the course of the last few weeks is this rotation. The IWM has started to show life. IWM trading at a multiple much lower than the S&P, not trading even close to the 30 times earnings that Apple is trading at here right now. I mean, half of that is really where the IWM is. Small caps have been absolutely forgotten. People are like, why would you buy small caps when Apple's going up 20% a month? I mean, at a certain point in time, could there be a catch-up trade? And I am, full disclosure, very long the IWM. Could there be a catch-up trade here on small caps? Because they have underperformed here for a very long time.
Well, that's such a great question, Dennis. And of course, it's also a good segue for me, because IWM, the Russell 2000, is still the granddaddy of my economic modern family for this very reason, is that if you really want to see what the impact of everything that has happened with inflation and with central bank policy, you have to look at the Russell 2000, because that's going to be the reflection of what's going on within the United States. Are we really growing here in terms of these companies? Now, I will get arguments on that. People say, oh, you should be looking at the S&P 600 instead of the Russells, but the charts are virtually the same. So to answer your question, all of the tech areas, and NASDAQ and SPY, the Dow, semiconductors, and now even transportation, and that's the key here, another member of my economic modern family, as is semiconductors, they've all gone through this 23-month moving average. And I believe when I was on last time with you, I showed you that, because it's a very important measure of a 2-year cycle within a longer cycle. And so we needed to see that get over the 23-month to show some level of expansion. And here we are, right? That's why we're seeing the 2% GDP. But IWM has not. It has not cleared it yet. It comes in at around 190 to 193. So to your point, Dennis, if it can get through there, then I would think that, right, we're going to see not only more of the rotation into the small caps and into the value versus growth, but it will be a true sign of healthiness for the market and something to actually look forward to, which of course would then spur more confidence from the consumer and then maybe bring back some of the money that's still on the sidelines into the market. So we're at a very close to a very critical point with that Russell. And we too, by the way, are along the Russells once it got over 180.
All right, Mish, let's pivot here and talk commodities, right? And we had big perception, commodities, big run, supply chains, wheat's going to 20, soybeans going to 30, everything got really out of proportion. We've had a pullback. Wheat is really pulled back. Corn is hold tough. So, but just overall looking at, the underpinnings of inflation, our commodities. What is your take on the commodities markets for the remainder of the year?
Well, the commodities market, Joel, as you know, are very volatile, and that's what they are. And if we think that we're in some level of a similar period to the mid to late 70s, this is exactly kind of what happened. There was this huge run in 76, particularly if we look at something like sugar, which is my great barometer. And then it came off like 40, 50%. And it was the same thing. The Fed actually relaxed at that point some of their tightness that they were doing. And then, of course, then we had that great bull run that happened in 79. So we're a little bit different here because the Fed is aware of this. But if I do believe still that these commodities are not done because not necessarily of the technicals, nothing really much has changed except for the fact that supply chain has eased somewhat, but we still have Russia. I mean, this weekend, everybody thought that, we were going to go into some kind of civil war in Russia, and then that didn't happen, but that doesn't mean that there isn't going to be Russian headlines coming out. We still have a lot of problems with weather. I mean, you mentioned at the top of the show that we were going to do this from my house this morning, and I came here because there was no internet. Well, the whole entire country has been experiencing either extreme drought, or when the drought alleviates, it becomes these flooding rains, and that's going to affect the crops. China's having a major drought. So Australia's had a drought, although I think it's been a little bit better lately. All of these things, along with higher interest rates, we have not seen the reduction of the costs when you go out and shop or you go to a restaurant. So the raw materials, that tells me that they've sold off from a technical standpoint, but they're still relatively rare, which is why these companies are charging higher prices, which is a lot of what's interesting about the PCE coming out today. So the very short answer is this, now that I've kind of given you the backdrop, is I still believe we should not get complacent about these commodities.
I agree.
I think DBA took this incredible run from 21.
I remember you talking about that. Yep.
Yeah, and then it got to 22, which is exactly where it needed to go, and went all the way back down, broke down under 20. It's now back over 21 this morning as I looked before the market. And this tells me that you got to keep an eye there, and there could be an opportunity. And we're talking grains. If we look at industrial metals, steel's been going up.
Yep.
Tesla's made deals.
Mish, I hate to cut you off, but we got an 8:30 number.
Oh, is it out?
It's coming up right now. So we're gonna go do quick coverage of that. And I really appreciate you coming on. We're gonna get you on again real soon. Everyone's like, have Mish on for the whole hour. So we're gonna wrap things up today. Mish Schneider over at Marketgauge, guiding us through the market. We really appreciate it. We'll dial you up again soon.
All right. Thanks, Joel. Sorry I went on too long. There's a lot to say.
No, it was my fault because I ranted too long.
Yeah, Dennis is throwing us off, man. He's fired.
Get her back on next week because we got to keep
Mish
going.
Mish in, yeah.
Special meeting. Right. Okay, let's go, Mitch.
All right, let's get to the numbers here. I'm going to give at least a preview really quickly here. Let's take a look at, of course, PCE coming in. Let me zoom out one time here so you guys can see a little bit better here. All right, let's see what happens when we get these numbers. Of course, we're going to get a lot of numbers coming in at the same time, but PCE is the most important. Focus is kind of the year-over-year number, right? The year-over-year prior was 4.4. Consensus this time is 4.6. So expected to actually come up on personal consumption expenditures. And month-over-month, prior 0.4, consensus 0.5 now. So that's one thing to keep an eye out for. I think this is something that could definitely change things up. And then, of course, if you look at the core was 4.7. Year over year is expected to be, again, 4.7. Prior 0.4, month over month. Consensus this time also 0.4. Let's see if we get a spike again in the PCE.
Let's see what the algo jumpers are doing here. I'm not going to jump ahead. I see 8:30 is probably out. The people with the super fast internet located right next to wherever the data comes out from.
Waiting.
It's coming in.
Ooh.
Well,
It's
the initial move is up, so
Yeah,
it's
initial
coming.
move's
It
up.
looks like it's good. We took out the pre-market high of 56 and a quarter. 8-day high at 44.62 is what I'd like to see here momentarily. So we did make it a new high. We're pausing. Mitch, you got some numbers for us yet, or
I'm
still
looking for it. There
They're
it
coming.
is.
They haven't
looking?
announced me.
Point 1 versus 0.5 year over year. 0.1 versus 0.5 expected. That is coming in low there and definitely giving the market to spike here. PCE index year over year for May, 4.6 versus 4.6. So taking a look here as the numbers come in, core PCE price index month over month, 0.3 versus a 0.3 estimate prior was 0.4. So that's coming down. Core coming down. Overall price index coming in pretty much in line there. But you guys see it. Seems like the markets are liking these numbers right now.
Yeah, the numbers in line, so was where it's expected, and that's good enough for this market because this market just wants to, continue to go higher.
The bubble, baby,
as long
continues.
as they don't, this market is of the case. As long as it doesn't come in and show inflation coming back, which it's not, that the party continues. Yeah. So multiples, who cares? We don't care about market multiples right now. We just care that stocks are going up, to Mish's point too. Looking at the portfolio managers, they don't care. They're just like, well, it's going up, I'm buying. That's what we're in.
Dip. There's no nothing. That algos, the quick jumpers before they got the number. I'll just give you an 8-day high, 44.62, and then I'm just going to give you one number after that. You know how I like my high close of the move? The Thursday before the quad witch, the high close of the move was 44.71 and a quarter. So that's the day number. That's it's an intermediate number, but that's a day number. We did find some sellers at the 8-day high. Bears are just trying to figure out what to do here. We got the Bears. Another number, what I like to do is I like to look at this 8:30, like where were we? Where were we right before the number? We ended that, the 8:30 bracket at 53.50. So we're a solid 8 handles above that. And there we go. Dennis, there was just such a one-way reaction. Did you see anything in the stocks? Did they just follow the spoos there and just
the stocks are just playing catch up a little bit here.
Yep,
We've run up about 7 to 8 handles here. I don't think this is anything. I think I don't know what to think. I think you're really at the crossroads. You're at the end of the quarter, right? So we should talk about this too. The end of the quarter, typically you get window dressing. Nvidia catches an upgrade from Daiwa. We can talk about that in a second too. Apple catches a buy rating. We've already talked about here. This is when managers that haven't held these stocks might actually buy these stocks today to make sure they're in their portfolio, because they don't want to go and say, they send out the quarterly reports. Like, why don't I own Nvidia? So they want to put those on. That's what window dressing is. You put the good companies in there so that when they get quarterly statements, you can actually see, oh yeah, I owned Nvidia. So I'm happy that I owned Nvidia. I bought it that day just because you wanted it on the quarter. So that's what window dressing is. So a lot of times what you see, and obviously nothing works in the absolutes, it just works in percentages. But a lot of times what you see is when you've had a good quarter, when you've had a good, run in some stocks, those continue on today. A lot of times what you see is the reversal happens after. So I would say strength today, maybe weakness next week is what the textbook would say in those names. So it's not a bad idea to book and take some profits into this. It's been a hell of a run. I sold my Apple way too soon. I was in some tech stocks, sold them way too soon. I sold some more Qs, just on the options expiration there. Obviously, it's been an impressive run. I just think now is the time, if you're in these for trades, maybe not long-term investors, but in these for trades, to start thinking about ringing the register into this strength. You're going to see some strength here. That is going to continue with the PC. We're going to see serious strength here at the open.
I do not think
I'm not saying we reverse today, but I'm saying quantitatively speaking, looking at, percentages, looking at, after the big quarter, the big run up, the big day, a lot of times you see reversals next week. So could we see some weakness on Monday? It is possible. I don't see any weakness happening today right now.
And Mitch, is this, for the Fed funds tool, this is cooperative numbers here, right? You take the, I don't know if this takes a quarter, 2 more quarter rate hikes off the table or not, but definitely. Well, I know that takes like 10, 15 minutes to update here. We'll get back to some individual issues here, but for the people that are, looking at, alluding to what Dennis said, look at your highs from last week, or not from last week, from the expiration week. Of course, that high in the S&P is at 93.75. That would exceed the daily target by 20 handles. I'm not saying that we're not going to go there, but if you're looking to trim today or potential targets today and or Monday, look where the stocks were on that quad witch expiration. See where they peaked there. Something like I'd really like to look at Microsoft here. Microsoft has got a long road to hoe to get back up to that level. Conversely, Apple, with the run, it's well above it. So there's a general gauge here. If you are looking to trim, look at potential targets, either that high or the close that day too. If you're looking for a number below that, you want to talk about this Johnny come lately NVIDIA it was an upgrade and a price target raise.
Mm-hmm.
On NVIDIA,
an upgrade. Daiwa.
Yeah.
Daiwa's small, not very influential, but they'll move it a little bit today.
I'll tell you one thing. It's off the support, and with that number reporting, did get a nice little pop just recently. I was even thinking maybe should I jump in there at 412.50s? But it's one of these markets where I feel like there's so many people that have been betting against NVIDIA that's easily how you get your face ripped off.
So what's happened? That is what has happened. I mean,
they're still betting against it.
Dan
even
Nathan
as
on
it
CNBC
down.
shorting the stock at $300. It doesn't make any sense. It doesn't make any sense at 413 either. So again, you have to understand, if you're in it for trades, you're going with the flow. If you're in it for long-term investments, I'm not adding to NVIDIA now.
It's very difficult to short a monster like that. And I think that's how I used to refer kind of Tesla. Shorting Tesla is always very, very difficult. And a stock like NVIDIA can always push right back up. We've seen the massive volatility increase these last couple of days. But I feel like, if anything, it's getting retail traders to overtrade within the range. And then they're just getting ripped on moves like this because they're, overnight, they're thinking that these stocks are going to drop, 10, 20 points. That's not what's happening. Let's go over to now Constellation Brands and their Q1 adjusted EPS here at $2.91, beat the $2.83 estimate. Sales of $2.51 billion, beat the $2.47 billion estimate. They affirmed their fiscal year 24 comparable EPS outlook, and getting a little bit of a lift here, STZ.
No lift.
Oh, no. It's
no lift. Just
pounded.
decline. So it popped on the initial numbers. Popped over 254, and then they realized, oh, wait a second, this is a consumer staple. Oh,
that's
wait
when
a
I
second,
was looking at it.
5.5%, 5.5% treasury environment. Why do I want to own consumer staples at all-time highs and 5.5%? And, the growth is just not there. I mean, sales were up a little bit. Remember, Budweiser has been struggling here. So you'd expect, them to have a big beat, or at least a bigger beat, because there's definitely some people buying more Corona and when they're not buying any Bud Light. So, but that's not a direct, because Constellation has so many other things. Like Tap's a more direct play on just pure beer. Constellation, I think of as spirits with some beer. So It was a decent quarter. It probably wasn't as good as some people may have expected, considering how bad the Bud Light numbers have been. So the numbers were fine. It's a beat, and a slight raise. But again, you're just looking here, and where is Constellation Brands? It's all about fundies right now, at least on the consumer staples. So P is actually only 21, which isn't too bad, because some of these consumer staples are trading 25. But again, when you put in a 5.5% 6-month treasury yield, this is 1.48%. So you're losing 4 on the dividend yield, and you're not getting a hell of a lot of growth. The revenue growth here on a Constellation brand, 7%. It's not nothing, but it's not really much either. So again, if I'm putting capital at risk in this stock market, it's got to show me some growth. It's got to show me, why. Why am I buying a consumer staple at an all-time high?
We should have this taped, and then when these stocks like the General Mills, because you've been very consistent with your analysis on this. Also, like where's the AI in Constellation Brands?
Matt Tuttle just tweeted at me, just said that exact thing on Constellation Brands. I mean, there's no AI in here. There's not. There's no AI in consumer staples. No,
Follow the brother, baby.
AI, just spelling it out. There's an A in Staples, consumer.
You know,
There's definitely no
238.
I in there.
Someone made a little stand at 238 here this morning. You're $3 above that. This 240 area, you know, a couple lows in that area. So, I mean, I'm not going to short it down, you know, $6 or, you know, get too excited about that. But, you know, who knows? 238. If it takes out that pre-market low, I just don't like the way it looks between 235 and 240. Actually, I don't like the way it looks between 230 and 240. A lot of open range there, but let's see if we can hold that pre-market low at 238. Coming back on the upside, you might have to wait a couple days to get a gap fill here at 246.02 for Constellation Brands.
It's just back to what you were saying, though. I mean, General Mills, the dip,
Nothing.
not bought at all.
No.
Not bought at all. Why? There's no AI story, and you have a 5.5% treasury yield. So Kellogg's, Goldman, with the ridiculous upgrade that it had a good day yesterday.
It's back, yeah.
It bounced a bit. It bounced a bit yesterday. I mean, Campbell's Soup sitting down here near the lows. We're just going through. Obviously, soup has nothing to do with beer, but there's all consumer staples. Coca-Cola leaking here. KO start does not look great. KO, let's do the details on this one. So just going to my trusty Benzinga Pro. P is 26 times earnings. 26 times
26
earnings.
for Coca-Cola. What?
26 times earnings.
5.5%.
Let's just do the math. And a 5.5% 6-month treasury yield. When yields are going up still, the Fed has so much said that. 5.5%, you're getting in your Coca-Cola, which is just, you know, this awesome 3% dividend. That's 2.5 below the treasury yield. So that should be discounted. The revenue growth here is 11%. So you do have some growth. But you want to pay 26 times for that? I'd rather own Apple than Coke. And I'd be chasing Apple completely. And I just did a rant on not owning Apple. But I would rather own Apple at 28 or 29 times, maybe it's 30 times, than Coke at 26 times. So I just cannot get on board with this consumer staple trade at all. And you know what? The market is proving me correct, because these stocks have not only not participated in the recent rally, they are going down. They are like bonds. They are trading. If interest rates fall off a cliff, then these stocks become more attractive. But when interest rates are still kind of going up,
and they're going to stay up here
that high,
they're going to stay up here too.
I don't think they're coming down anytime soon.
No,
so I just think there's so many better places for your money.
Remember we were talking about Warren, and we we're like, man, he just got too much Apple. Remember that? Yeah, like he's
been kicking butt and taking names there with all that Apple.
I mean, I'm just looking at Brick B. That's coming back up near its all-time high. Apple and Oxy. I mean, the Oxy's a little bit different story, but you know, when there was, you know, a lot of indecision on Apple, he came out with his, you know, his 13F, and he added to it. I mean, he's the GOAT, man. He is the GOAT of the stock market here once again. With that, just a little ways from the all-time high, but that heavy concentration of Apple, boy, oh boy, it's doing them well. I don't know. Like I said, the Oxy, these oil stocks, I don't know. Look at it. It's had a nice little bump here off that low, and crude's hanging in here around 70.
So going back to what Mish was saying, I believe there is the opportunity for a catch-up trade in some value names. I think next quarter, maybe. And again, this all depends. If we get more bank failures, that trades off the table. So the one thing holding the IWM back and the small caps back is still the KRE. We need to not see any more bank failures. That's what scares me from going all in, because you know what? I'd be all in on this value trade. I'd be all in on the IWM, and I've got a pretty good position. But I mean, I would be heavily in it if I wasn't so concerned about the banks. Because I mean, if the banks roll over, and the banks had a fantastic day yesterday. So they were up, you know, in the stress test. I don't get it, because I thought this, you know, was just obvious that they were going to beat. But again, I forget that the market just doesn't price in obvious. So, you know, that's why, you know, these things were all popping yesterday. But I think there's opportunities. This market has a lot of pockets where there's good value here. There are stocks that are cheap. You don't have to just run into everything expensive.
Yeah, I mean, you got a little bit of risk with the Schwab, right? But that's starting to show some life here off the stress test. Gapped up yesterday. I think 60 is just the level there. I think you got some room up to 60. But once again, are you stepping into a potential landmine, with something like Schwab? But it's been quiet. I like to look at some of the other brokers too, Interactive Brokers, just doing what it does, man. That was I was thinking when
That's all
everything.
me. Just kidding with you, bud.
But it's a nice rally. S&P's hit 66 and a quarter. Not much up there. As I mentioned, the 8-day high was 44.62. But so far, good. Looks like a good end to the quarter. And I know I'm really sorry about having to cut Mish off, but we wanted to do the PCE number.
We're going to get her back soon because she didn't get her points. We'll try to get her back next week if she's free. Because people are really excited to take her more from Mish.
All right, team. I tried to give you guys the burn leaving port alert on the cruise line as they continue and continue. Carnival shares trading higher after Jefferies upgraded the stock from hold to buy and raised the price target from 9 to 25 here. So definitely, they've already left port. So it's going to be a little bit hard to jump in on this trade now. I sold Norwegian a little too early. I had both of these, Carnival and Norwegian. So Norwegian around 17, and that's just continuing to just keep climb. I'm going to look for a pullback, but I don't know if it's ever going to come. It seems like.
Mitch Hodge indicator. What day?
Hey, it was right here.
May 1st, man. May 1st, I came back, baby. And I said, you know what? I'm bullish the cruise lines, even on Royal Caribbean. But Royal Caribbean was already a little bit higher. So I said, you know what? I'm going to look at the other two for a little bit of a lag move there. And boy, they lagged, but they were playing catch up pretty quickly.
Boots on the ground or boots on the sea, whatever you want to call it. That was Mitch Hodge when he came here on May 1st and said this Royal Caribbean's cruise line was busy. The stock was like $68 and it's now $102. Sometimes it's just that simple, folks. And people want to do things. And you know what else? The cruise lines, you know what they had? Weren't very expensive. Where's the RCLPE here right now? 22 times after the big run up. 22 times after the big run up. CCL trading well. CCL is still 285 times.
It was off of the pandemic low. They would have got this on a pandemic low. Anything near that pandemic low, I thought was a sure sign that maybe we could at least risk off of those levels.
That's a good area.
And oil prices have been hit too. I'm sure gas is helping them.
Yeah,
a lot of things
airlines with the same opportunity. If you look at American Airlines, it was pretty much the same kind of trade. I'm just mad because I talked about these like longer term hold swings, but I just went with my kind of like original like hold, like 2 weeks, 3 weeks. Take the money.
You need to extend that holding period.
Yeah, I need to put that account away and not look at it, and that's the hard part there.
You know what? I know that the Mitch Cruise indicator was a good one, but I don't think I ever told you guys about my Aunt Arlene indicator.
My
Aunt Arlene. Stop. Who is Aunt Arlene?
Aunt Arlene, my dad, who passed away in 2010, his sister, and she's 90. And she's a savvy investor. I'm very close with her son and her daughter. And I was talking to him a lot during COVID. And Aunt Arlene was buying Carnival Cruise Lines hand over fist. And I'm like, oh man, I don't know. I mean, all the debt and everything. And she was like, eventually people are gonna go back to cruises. And she bought that thing $9, $10, $11, wherever it was. I didn't talk to her when it came back down under 10 before, but it's just like her, market intuition, savviness, being around for a long time. Everything will pass, right? I mean, it's hard to look at that in the moment, but now I'm gonna call and tell her to
Aunt
sell.
Arlene.
The Aunt Arlene indicator. Yeah, she's like 91, 90. She might be 92 now, but
holy, so hot right now.
Yeah, I hope I get some of that. But CCL and upgrade, they hit it on earnings. It came right to a number 14. It said, okay, maybe I'll risk down to fill in the gap. Now 14. Now we may see 18 today. The next monthly high that 1783. I'll just give you that. That was if you've been waiting since May of 22, that is a target. After that, you get to 2150. RCL, this was a little bit of a clue because it got hit on the CCL earnings, but it came back and closed near the high of the session. And then you took out your post-pandemic high at 99.24. So look at this thing. This thing is almost, it's in triple digits. Let's look for NCLH. Let's see where that's probably a little bit, that's a little bit more of a laggard here, huh?
We can see what best of breed has been. I mean, Carnival Cruise Lines is $17. It was $70. NCLH is $20. It was $60 before the COVID happened. So, I mean, are these things going back? I think some of them had some dilution, Joel.
Oh,
so, I mean, that's the problem. And we've talked about this in the past. People will cite, how good a stock Citigroup's been in the last 10 years. But you want to know how good a stock Citigroup's been back in the last 20 years? Not very good stock. So go to the long-term chart for Citi. When you start diluting, it is very, very difficult for stocks to ever come back. Here is your Citigroup chart. This was dilution at its best. People don't realize that this was $550 a share. So if you were so inclined to buy and hold, they diluted the hell to survive, and that was it. They could never come back. AIG, same chart.
We never talked.
Bring up AIG, same chart. Dilution. Look at that. That's not splits. That's not adjusted. That is simply the chart. And because they had done, obviously the reverse split and all the other stuff in there, $1,400 a share. When you own a company that starts doing massive dilution to survive, there is a high probability that stock price will never, not 10 years from now, 20 years from now, never come back, because it's just simply too many shares outstanding now. So you got to look at the market cap. I'm sure the market cap on AIG and Citigroup might be at all-time highs because you multiply the shares, but though it doesn't help those shareholders that got the hell diluted out of them. So do we, have the same issue? I don't remember the CCL dilution, but I believe there was some serious dilution in CCL. So that is why RCL is best of breed. I don't think they had the kind of dilution that CCL did. We'd have to go look at the records, but I remember them selling shares. So to survive through the tough times.
CCL, they did it. They did it again. They did it again.
I'm just going from my memory. I have nothing in front of me.
Yeah, no. I know. RCL may have done it once or twice. I don't know if I remember Norwegian doing it at all, but I know Carnival. But they needed to do it. Who was that one guy that came out and put a 0 price target on it? Remember that? I think that's maybe when it came back to the low. I can't remember what.
They just weren't expecting them to be able to get the financing that they needed, and they got it at the bottom there to get them through it. And that's what changed this around. At first, they were thinking that the debt was just going to be too high, that they weren't going to be able to pay the interest that was there, and then they were able to do refinancing even at that price. So that saved CCL, and of course RCL is more profitable than CCL, but CCL is just that debt cow, right? It's a debt cow. It isn't going to change.
Too much debt in there now. Let's just go. Trusty Benzinga Pro. You guys can bring this stuff up. I know you have difficulty doing that, but we could just show you where we're going here.
I do have a friend that has CCL like $10, and I'm like, man, I understand why you don't want to sell. Like, is it going to come back down there? I mean, it might
debt. Look at the debt here, just comparatively. Sometimes there's $31 billion in debt here, Joel. $31 billion in CCL against $4 billion in revenue. They only have $4 billion in revenue, and they have $31 billion in debt. Let's go look at RCL comparatively.
I bet you it's not nearly that.
So RCL,
less than half.
RCL's debt is $19 billion only. So what did we say? $31 billion?
Yeah.
The revenue's lower though too.
Yeah, revenues, $2.88 billion. So it's, again, this is the way these things operate. These ships are expensive. They got to have a lot of borrowed money to do it. But when interest rates are high, it's not helping here either. Not arguing against it. I mean, sometimes you just got to go with the flow, and we know that people are interested in doing stuff. So it's not surprising that these things had runs. But are these like your core investments in your long-term portfolio? Like, I don't know.
It depends where you got them. I mean, if you got CCL at pandemic low near
maybe.
I mean, I wouldn't be too
But
mad
I don't think
about
it's
it,
going back to
you know?
70.
Yeah,
I think the dilution there
I would
is just
agree.
too
I
much.
would agree. You can't think that it's going back all the way to the top of the chart. That's what you're telling us, Dennis.
Yeah.
And I think that's a very wise thing to think about, because I think a lot of people, when they think about their investments, they look to the left and they think that, oh yeah, I'm just going to be able to climb back there.
That
with
they
time.
do.
And
That is what
that's the
that is what a
hardest.
lot of newer traders and even seasoned traders think. That
Mhm.
if I hold long enough, eventually I get my money back. If I hold on to my CGC, if I hold on to my pot stock, eventually I know it's going to come back to $50 and I will get my money back. It's 42 cents, folks. It never made any sense at a $50 billion valuation. That was all just pure stupidity, is what that was. You paid $50 billion for a greenhouse full of pot plants. That same
And what about
greenhouse,
tomatoes, Dennis? What
that
is the
same greenhouse. I'm from Leamington, originally.
Guys,
Leamington.
stop hating on my
I
pot.
can
It's
tell
gonna come
you
back. It's
that
not legal.
greenhouses are all identical. The
It's
one
not
with
legal,
the pot
man.
plants in it.
There's
they
way
value-
too many, man. It's just too many dispensaries.
Dennis, you know what the difference is? Right here, where I'm at right now, if I had cannabis, I'm going to jail. I cross the state, I'm not going to jail. That's the difference. Wait till that turns. Wait till that turns.
These people,
There's so
do you
much
think it's going
supply
back
out
to
there.
$50 CGC?
Let's turn it to something that's valuable.
No,
I
I just want to make the point here. So
Yeah,
this
yeah,
is the point where you've got to just sometimes, and I'm not talking today. I don't know. Maybe CGC could go up from 43 cents. I don't know. But I tell you, when it was $50, it was all irrational exuberance, to quote Alan Greenspan, because you can take, and I can physically tell in Leamington, I know what these greenhouses, my dad and uncle owned a construction company. We helped build these greenhouses. I know what they are worth. These greenhouses, some of them, the greenhouse complexes themselves are probably worth 5 to 10 million. The one full of tomato plants sells for 5 to 10 million. The one full of pot plants was valued at 50 billion. That is pure stupidity. And that is why all the people who invested in those lost money. Sometimes you just got to compare apples to apples. Greenhouse full of pot plants, greenhouse full of tomatoes. Greenhouse full of pot plants worth more. Is it worth 500 or 1,000 times more? No, that's nonsense. And you know what? The people who invested in that lost their money and deserved to lose it, because we were saying on this show with that comparison for the last 10 years. I never saw it going like that much. I thought there was stupid ones 5 billion. I never saw it going to 50 billion. So it was still stupid. I was proven correct in the long run. So if you hold long enough, valuation does matter. In the short run, valuation doesn't matter at all. So if the story is hot, pot stocks were hot in 2017, 2018, hot again in 2020, valuation doesn't matter. Once the story cools off, that is all that matters. And the bottom line is those greenhouses full of pot plants, greenhouses full of tomato plants aren't that much different.
Well, I can say at least that I would take the pot over the tomatoes, but let's go to
Sure,
the
but are you going to pay
hotels.
1,000 times more for those same greenhouses? I pay more, but not 1,000 times.
I love tomatoes.
What about hotels here? Because I'm keeping an eye on them. I've seen Marriott kind of setting up here for a little bit of a move.
Yeah.
MAR, and then Hilton. And then the one that I'm watching for a little bit, maybe a lag play, I'm going to look at Hyatt, because I like that chart setting up here. It's kind of in a little bit of a symmetrical triangle, bounced off of 108s multiple times here. And if
I like,
Marriott
yeah.
can keep
Look at
going-
the upside here too. Look at this. This has got a chance of a breakout. Look at all these highs at this 112.50 area, and you had a nice little day yesterday, and now you're getting a running start in it. So don't mind this one at all. 1268 high, 1231 close. 4 shares have traded in the pre-market, but if there was a 4-share offer there, I'd probably lift it and see it maybe go up. This is not really a big bar here. 114.16 is a target, but looking good. Hotels are looking good. Let's look at Airbnb here. Ooh, consolidation station here. Look at this. Move up from 105. Now you're finding buyers at the 124.5, 125 area. Move up after potential move up. Bad day yesterday. We'll see if Airbnb can catch a bid.
And that's where it starts to think, what recession? Look at Play. Look at David Buster's, man. What recession?
We've been saying what recession for a long time on
You
the
know,
show. It
like,
hasn't come.
I
I
don't
mean,
think
people are interested in
the
doing
stocks
stuff.
aren't telling us, right?
People just want to get the hell out of their house and do stuff.
People want to do things. I mean, some of the valuations on these stocks can make some sense, though, too, Mitch. Yeah. I mean, we can just chase the AI story here and say, oh, look how great, Apple has been. Well, this play has been pretty dang good, too. This play has been a pretty good stock here for the last quarter. Really good. I mean, we're up from $31 to $45. What's the valuation on play? It's just a good exercise to sometimes just look.
Look at all the chances you had at 30 there.
It's 13 times earnings.
Right, look at that. Holy macro.
It's trading, Mitch, it's trading 13 times earnings.
That's why.
I mean, this would have been your value play that came in June. We talked about value stocks. You're probably buying it at 8 or 9 times earnings then. Well, if you're not going to recession and you're not going under on some of these companies, at 8 or 9 or 10 times earnings, a lot of these companies make a hell of a lot of sense. I would buy play on pullbacks.
Adult Chuck E. Cheese. I don't know, man. It's just so.
Maybe not. Maybe I wouldn't.
I have to take
pick a different one. I don't like.
I was in
one.
I can't do that.
I was gonna say Disney, but no, it's not the same thing anymore.
No, Disney's still got.
It's not the same
problems,
thing, man. It can't get that same love, and I think it should get the love, but it's just not getting it, team. But 88, man, 88 is holding on like a freaking tank. That's 4 times that it's tried to go through there.
$25 worth of tokens at Dave & Buster's. I can tell you, I was at a Dave & Buster's in December, and I was given tokens. I went to people and I gave them away. I had to get the hell out of there and go to a different tailgate. But I'm an old guy. But 9:01 here, Dennis. I'm going to step. No pre-market prep plus today, so I'm going to stick around here and do a few tickers with Mitch. Triple D, any closing thoughts?
I've given lots of closing thoughts. I think we're just at the turning point here. Spinner said it here too. End of the quarters, you can see turns. Right now, what I'm looking for, and again, I like the growth on pullbacks here, but this is not a pullback. This is not a dip. This is, these are rips. So I'm not looking at buying Apple at all-time highs. I'm sorry. And maybe it's going to go to 40 times earnings. Maybe it's going to go to 50. Maybe it's going to go to 100 times earnings, and people don't care. I'll tell you that earnings isn't going to go up as much as people think, though. Everybody thinks this AI is going to double their earnings. I don't think that's happening. Maybe I'm wrong, but I don't think it's going to happen. So I'm looking at other companies. I think the cruise lines were an excellent call by you a month and a half ago. I think the value trade is back in favor to a certain extent. Could the quarter change? Could next quarter be value over growth? We're seeing in the last month. Value is outperforming growth in the last month. Definitely. QQQ is down here over the course of the last couple of weeks. IWM is getting back up near the highs and almost at the highs from where it was. So you're starting to see some outperformance in some of the beaten down value names. You're paying 9, 10, 12 times earnings for decent companies. Seems pretty cheap. You're paying 30, 35 times earnings for decent companies, great companies. Seems pretty expensive. Maybe it's in the middle somewhere, but I'm betting on value to a certain extent right now.
Definitely. Just to kind of mention that, I did take a shot in what I think is a value name, but it's not really the biggest one. What about Deere? The Deere, I took a shot yesterday. Got it.
Cheap
I got
stock.
it. I went for it. I got 401 yesterday, so I felt like that 400 was a nice little level to go off of. So we'll see what happens in Deere. I've been talking about this XLI move that just keeps going. Like
12 times earnings on Deere. If you're not going into recession, the stock is a buy. I've been arguing before, when I was saying 440 didn't make any sense on Deere, went to 360, but times have turned to a certain extent. We don't look like we're going into a recession anytime soon. People are still spending like crazy. We know, people are finding money even in a higher interest rate environment. I mean, 380, you got 380 on this thing. I'd be a buyer down at 380. Am I chasing? It's run up quite a bit here now from the June lows. But stuff just got too cheap back in June. There was such a separation at the end of May between, 30, 35, 40 times earnings and then 9, 10, 11 times earnings on a lot of these other companies that separation changed. Deere became hot. It was 9 or 10 times earnings in May. So it just got too cheap. It came off from the 440 when it was like 15 times, and we were like arguing that, maybe this is getting a little bit long in the tooth of going to recession. Well, it came back off. It came back off 30%. So at a certain point in time, it turns from a sell to a buy. So Deere is maybe at that point. I think I'd buy dips on Deere.
Okay, for looking at Mitch, I mean, you got a ways to go to
Yeah.
get to yesterday's high. I don't know if you can hold out for that, but 2-day close 405.20. It's not there yet, so there's a potential target. And then the high from yesterday that comes in at 406.81. So maybe playing a little bit of catch up here with Deer, but S&P's continuing to charge higher here. We got some other stocks to take a look at. Mitch, which one? I'll let you pick here. They just do a
I'm gonna
bunch
hop.
of ticker.
I'm gonna go do some trading. You guys are tired of because it's an hour of me yelling. So have a good weekend, everyone.
Have a good one, Dennis. Enjoy your weekend, my friend. Get some rest. All right, let's go to let's take a look at I want to take a look at a chart here. What about literally here? This is an interesting
Turtle
daily
Beach.
chart. Yeah, Turtle Beach. I actually took a shot on this one a couple days ago at 11:45. My biggest thing is the daily chart just looks like just prime time. It's nice and sleepy. Just recently made a run to 13.19.
Yeah,
Of
tough,
course.
quiet range and doesn't trade a lot of volume. But what's going on at 1171? That's a pair of highs from yesterday. You also had a pair of highs at that area before. So, I mean, 1171 and a little roadblock here at 12. It's been a kind of a sleepy chart. I don't see the AI in it, but let's see if we can get above the highs at 1171. Was that one from the chat or was that one from
Honestly, this is one that I just been. A lot of times for charts like this that just look good on the daily, I'll set an alert, and I'm willing to take a shot off the daily chart. So I
Okay.
took a little bit of a shot on that, and it hasn't moved, right? So we'll see if it actually does move. A big part for me would be watching Logitech to see if that can start climbing back. It got hit hard on their earnings, and they're starting to get back a little bit of that gap. And so I'll see what happens there on Logitech.
Yeah,
To
that's a
see if it can
tough one.
start coming back.
Let's
Yeah,
take
that
some
one's been
from
hit.
let's take some here from the chat.
Let's
And
do
I
it.
know when I saw it, what do you say? So a good one. What's a good one? Oh, let's talk about the
Lumina.
space real quick here.
Let's take a look. SPCE.
Yeah, we talked. I mean, I definitely it was a sell that they got all excited, got over $6. I mean, you got good support in the lower four handle, so I have no problems with that. You know, you a very identifiable support. And then if you do get some kind of catch a nice bid, you just got to be aware that there's a pair of highs, almost matching highs, 44. 4.88 and 4.89, and then Joby Aviation. That stock had a little dipsy doodle, got real carried away on the news, but found some profit takers. Still an uptrend. I mean, I'd be more inclined to try and buy it at 9 than this area, but if you think it's going to be holding this gap for some time, 957 was the low yesterday. Currently trading 998. I think coming hard off that 1198 area, it's going to take some time to get back up to there.
All right, a chart that I've been struggling on. I've been shorting and just like making money, giving it back, making money, giving it back, making it money, giving it back. So let's see what Joel's outlook is on Starbucks. Of course, everybody knows I'm a bear in this stock, but those lows, they just don't want to break. I have a feeling Joel will tell me, hey, they don't want it to go through that level. What do you see here?
Yeah, it's just so much monthly support here.
Yeah,
You
that's
can
where it
see
gets
it on
hard.
the monthlies. Someone's making a stand here. On the other hand, just hasn't been a great. You're trading above 99 here. Yesterday's high is up at 99.83. So that that's still 60, 70 cents away. Sleepy, easier to find support in this one under 98. Nothing jumping out to me on Starbucks. How's your bros doing? BROS, just hanging out
Yeah,
here.
it's not going
No
anywhere,
AI,
man.
right? No AI.
No AI. And like I said, comparable sales still going down. When that trend changes, I'll mention that. All right. But right now, comparable sales still going down. One that's interesting that I already sold on the rip a day ago was Home Depot. So it wasn't yesterday. It was let's say 2 days ago. On that rip on Tuesday, I sold out on that. I had it at 301. It was just a nice little like 2 day, like nice 4%. So I took the money and ran, but it looks like it caught a nice little dip by yesterday. What do you think about Home Depot?
You got a nice area to look at. You want it to get up to 312.04 or no 312.94. Wow. Holding the previous day's high at 308.13, so that will act as support. Let's see if it has. I mean, that'd be another $3 here. 312.94. Trading up 0.71, kind of trading with the market here. But this did make a new high over the expiration high, so looks like it's going to be a little bit of tougher slide. I like 312.94 as a target. Things happen is asking about MMMA trading up 83 cents, awful close to all-time highs here. You just want to see it get up to this the recent double top here back from May. That would be a firm target for me at 392. That's $3.50 away. What was this high? This high was I'd like to see it hold 388, and let's see if we can mosey our way up to that double top at 392.
All right, the chat wants to talk about these battery plays, Joel. They're a little bit smaller, but I'll try to bring up all three of them, and then maybe you can tell me which one you at least see some. There's FREY, that's Freyr battery. That got a pop yesterday. And then there's MVIS. I'm sure you've heard about that one being talked about multiple times. That's Microvision. And then the one I do have a swing on that I've talked about since Toyota Motors mention of solid state battery, which is QS. So I have that one below 7. I'm already up there close to 8. But I'm looking at these battery plays. Anything with solid state batteries has been starting to get a little bit of a lift. We'll see
this FREY, the boat got loaded yesterday, folks. Volume jumps from 2 million to 13 million. So boom, loaded up. You're going to need, but had a nice breakout, but it was a gap. You didn't get a chance on that. With these and what we've seen in the past, man, you just don't want to stand in front of them. And I would look, if I had a long, I'd be looking for 991. That's yesterday's high. You also poked your head up towards the $10 area a few other times and failed. But man, it got the volume yesterday. If you want to ride the Mo, just keep riding it. Just be careful if it consolidates and, you get a couple, either consolidates and then kind of, puts in a little bit of a trading range and breaks down the lower end of the range. I'll look at MVIS, and that's a little bit of a quieter one here. That's perking up. That's up 42 cents. Decent volume. I mean, if you're buying this off the open, you want to see 440, 450, 460. You don't want to be hanging out. If you want to be cheap, wow, this broke a multi-day losing streak too. If you want to be cheap and maybe catch it at the top of yesterday's range, 410, and then QS. Boom, boom. That's up 14 cents. Boom. Wow. This $8 area has been pesky. And you're testing in the pre-market, gets through 8. Looks like I got some more room on the upside. All right, I'm going to bug out of here. S&Ps are just chugging towards that number I gave you, 44.71 and a quarter. That's just where I want to see us close above today. You're about 6-7 points from your average 9-day average trading range. That would put you up at 44.76. And if you're a Super Bowl today, the recent high of the move made on that expiration Friday, that came in exactly at 44.93.75. And it was interesting about that. It hit it in the pre-market, and then it hit it right off the open. And then we had a little bit of a tumble that day. So that's it. Glad I got to stick around a little bit longer with you. And everyone, no pre-market bet plus today. Tune in. Kenny Glick is going to hop on with Josh at the closing print at 3:30. And I'll be back with you guys on Monday. Go get them.
All right, you guys check that out. Of course, that starts at 3:30. Don't miss that. Now to bring you guys over to live trading action. Let's see what Ryan and I can get into. See if I can go ahead and make some money. Yesterday was a little bit of a tough day. Had a good, first 4 days. First 3 days, right? Monday, Tuesday, Wednesday was green. Yesterday, red. Let's battle back, right? Let's see what we can do today on Friday. See if we can get into the green and see if these stocks are going to continue to climb with the AI bubble. Find out right here on live trading. Don't go anywhere, team. We're starting up in just about a minute.